This indicator could show the exact bottom of every dip with incredible accuracy. Best part? It's completely free to use. Let's see how it works. Here on the Bitcoin chart, the price is seen dipping. Then, the indicator flashes green, signaling that this is likely the bottom and that the price will start to reverse. If we let the chart play out, what happens? The price reverses upwards, as signaled by the indicator. If we had taken a buy position here, that trade would have been very profitable. Let's look at another example. Here we're looking at Tesla stock. And again, the price dips and the indicator flashes green, signaling that this is likely the bottom. What happens next? The price reverses upwards, as signaled by the indicator. Now I know what you're thinking. This looks too good to be true, right? But trust me, there's a reason it works. And in this video, I'll reveal exactly what this indicator is. Not only that, I'll also reveal how you can use it to time the bottom on any asset with high accuracy. Let's dive right in. This video is about an indicator called the Williams VIX Fix, created and published on TradingView by a user named Chris Moody. To add this indicator to your chart, head over to TradingView, the platform I'm using for this tutorial. Then, load any trading instrument of your choice. In this example, we're looking at the Ethereum chart. Next, select a time frame. Based on my experience, this indicator works best on higher time frames, like the 4-hour or daily chart. For this example, I'll be using the 4-hour time frame. Finally, click on the Indicators tab and type in CM Williams VIX Fix Finds Market Bottoms, and select this one created by Chris Moody. Once it's applied, you can also choose to customize the settings, but I found that the default settings work best anyway, so just leave it as they are. So, what exactly is this indicator and how does it work? In short, the VIX Fix is an indicator designed to identify potential market bottoms by analyzing volatility in the market. It works on any asset, whether it's stocks, crypto, or Forex. Looking at it, it's pretty straightforward. The bars on the indicator measures the volatility of each period. Longer bars means higher volatility, while shorter bars means lower volatility. The concept behind this indicator is simple. It suggests that markets tend to bottom out when volatility is at its highest. So, when the indicator detects that volatility looks overextended, it flashes green, signaling that the area could be a potential bottom and that the price could bounce upwards. Now, even though it's a really good indicator, you shouldn't take trades based on the signals alone, as there are a couple of problems when used on its own. First problem is, if you look closely, you'll notice that, while the indicator succeeds in finding market bottoms in some setups, there are also times where it shows false signals. But don't worry, I'll show you how to fix this in just a minute. Second problem is, when you're trading it live, you might notice the indicator has a tendency to display multiple green flashes, signaling that the market is bottoming. Eventually, the price does bounce. But how are we supposed to know exactly when to buy if the indicator displays multiple flashes? To solve these problems, you have to combine the VIX Fix with another indicator. Here's how. Go to the Indicators tab again and type in Stochastic. Click it and apply it to your chart. Once it's applied, you'll notice that the default settings for the Stochastic can look cluttered and messy. That's why I actually have my own custom settings, which makes it look much cleaner. Like this. And in my experience, the custom settings give more accurate signals compared to the default one. So, if you'd like to know the exact custom settings I use for the Stochastic, I revealed them inside my free Telegram community, which I've linked in the description. Once you've joined, just type Stochastic Settings into the search bar, and you'll find it there. However, if you insist on sticking with the default settings, that's completely fine too. But for the examples in this video, I'll be using my custom settings. So, here's how you can combine both indicators to create a high win rate strategy. First, we want to wait for the VIX Fix to show a green signal, like in this example. Next, look at the Stochastic Oscillator and make sure that the blue line crosses into the oversold levels, which is marked by this line here. Now, for your entry point, wait for the blue stochastic line to cross above the orange line, like this. But make sure the candle has closed when the crossover happens. Once both signals align, you can enter a buy position. For your stop loss, place it slightly below the last swing low. Set your take profit at 2 times your stop loss. As you can see, the price bounced and hit our profit target. Let's look at another example. Here, we see the price moving down, and the indicator gives the first green signal. However, The stochastic isn't in the oversold zone yet, meaning no entry.